Hello everyone! I don't know why I sing that when I say it. Wow, my hair is just doing its own thing right now. Anyways, it is our market update today, September 9th, with Ben and Nykole. Let me get Benjamin on here. Hope you guys are all having a great day. It is my youngest grandson's first birthday, so that is very exciting. Let me approve Ben. It's like a whole process to get a live going with a guest, so he is being added right now. Hello, Ben.
Hello.
How's it going? I'm going to turn it up really quick.
Doing amazing.
Awesome. So we're going to get going into our discussions today. We had a really good team meeting yesterday with all the ladies at the NLA Real Estate Network, and then Ben came in and talked about different perceptions of rates and what's going on. And so we're going to share a little bit of that today. We're also going to talk about why it would be important to work with a team versus a single agent, why you should be doing your due diligence of making sure that you're interviewing and checking out. Hi, Bestie. Auntie Buddy's on. And what else did what does it mean to hear rate drops, what to be aware of, what is going on in the news, and all of that kind of stuff. So we're going to start today with a few little stories that have gone and happened this week. We had one of our agents on the team had a mutual friend slash vendor slash service provider that has had their home listed with a different agent, and they've had 3 offers. All 3 offers fell apart, whether it was like inspection and financing, whatever it may be. And sorry, Addie was calling in, really frustrated and wanting to know, like, why didn't I get to keep any of the earnest money? Why are these falling apart? What is going on? You know, this person's telling me this and all of that. What made me think about during the situation is why this client isn't having their conversation with the agents. And when I was talking to the agent on our team, she said, well, she's asked them, but she doesn't really get straightforward answers. And so, you know, this is the second or third person that has reached out to us that is listed. And so really encouraging them to go back to their agents and ask the right questions and help them build confidence, because sellers are feeling a lack of trust and confidence in the industry right now, with time on market and no showings, whatever it may be. So, and I think part of it is a lot of agents don't want to have those uncomfortable conversations up front, whether it's pricing, home condition, or when it comes to contingencies and negotiations. I'm not going to speak for all, but a lot of agents are kind of tiptoeing around the things that need to be said, and therefore it may feel to a seller that they're not getting their questions answered correctly, and it's building a lack of trust, and, you know, possibly hiring a new agent to come in and help them, because they're stuck in these situations where they don't know what's going on and they're feeling out of the loop. So that goes back to doing your due diligence. I know that it is easy to hire your cousin or your friend or the agent that sold you the home, or, you know, a referral. And, you know, 81% of people, especially sellers, only meet with one agent before listing their home. And as I say, not all agents are created equal. The issue with that is, like, what does that mean to the consumer? Why are they not created equal? Well, this is the perfect example: communication. Not everyone communicates in the same way. They will say that they will, but do they actually consistently fall through with that? When SHIT hits the fan, how are they going to be solving that? What does that look like? And so really being able to have that. What is their marketing strategy? Are they just saying, you're saying I want to list at 550 and they're like, okay, let's do it. Or are they going through the comparables one after one, calling the pendings, calling the solds, getting the story on the houses, going and previewing those active listings? You know, what is the competition looking like? What market are we going into? Not the market where we just sold. You know, there's a lot that goes into it. And because you may have a relationship with them and the trust is already established, sometimes we can make decisions that shouldn't be made not in your best interest and you not even realizing it's not in your best interest. So, you know, you should be interviewing and comparing notes. You know, if you found out that your mom had cancer, you're not just going to go with the first doctor. You know, you're going to get a second opinion. You're going to figure out what the best treatment options are. And I know it's not like someone's dying or someone's ill, but this is the biggest investment in most people's lives, the biggest wealth opportunity. And I'm taking a stand to say we allow crappy service and not knowing it's crappy till you're already knees deep in it. Like, let's be proactive up front and make sure that you're working with the right people every time. And how do you know that? We have a list of questions. You know, there's a lot of different scenarios, but I will interview against anyone. And if you decide not to use us, at least I know that you went through that due diligence and went about to make sure that you feel the best with the person that you are working with. So,
I love
do
it.
you want to add anything to that, babe?
Well said is what I'll say, because that is exactly how I'm feeling in the refinance market with rates and the news saying rates are coming down. You've got to inspect what you expect. You can't just assume that the advertised rate or the rate that's being promoted out there is what you're really getting without actually doing your research.
Yeah,
It's you.
tell me more. Let's talk about that because that is something that, you know, we're seeing right now. Real estate agents are even sharing it, right? From the Mortgage Daily. And it is exciting, right?
Yeah.
Like, we mortgage lenders, realtors, you know, title and escrow, whatever it may be, have been in this lull of high interest rates, people being like, no, 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 I'm not going to do anything because of rates. No, 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 no. So you start to see a little bit of excitement, right? And you want to blast it out to the world and share. But what people don't know is what is behind that and what to be aware of. So walk me through like how that works.
Yeah. So the best advice and the stuff I can give on this is just do your research. Don't just look online or, go with a company that maybe a friend or someone went with and you're seeing a rate that's maybe in the low fours or fives when the average or actual market rate that local lenders or someone you trust is saying it's higher. The biggest reason is sometimes they do hide fees. This is the time in the 20 plus years I've been helping families in Washington state. When these rate drops happen, it's the time that those companies that have been sending you stuff in the mail, that are calling you, that you don't even know who this person is. You've never met them. You don't even know how you got them. You don't even know who they were referred by. There's no connection there. Those are the ones that usually, and not every time, there's good ones out there. You just have to be very careful and inspect what you expect, because they may offer something that's very, very low and sounds amazing and you want it. But just like you said, just because you built that trust with that client, or excuse me, that person who's going to list your home, you trust that they're going to give you that deal, that rate. And at the end, it may end up costing you tens of thousands of dollars when that's not what you signed up for. So just really inspect what you expect. And when you're searching online, go around and definitely look at the advertised rate, but then take it and read the fine print, because in the fine print, it does say subject to change and extra costs. There's other things in there that, what they say, get an official loan estimate. Call around first, shop, definitely compare. Call me, I'll look at it really quick and tell you if it's beating what I have, or I'm sure other lenders will do this too. They will be very upfront and honest with you. Most of the time, because we're in a decreasing rate market, is what they're saying, you don't want to pay points right now. You don't want to pay especially on a refinance, you don't want to pay extra fees, because those rates in 6 months or a year may be lower than what you just bought down. And you may not even know you're buying it down. I just looked at a client's documents this morning compared to the current market rate, compared to what they were getting, which was very low. They had 3 points on it. Their loan's $742,000. So they had over $22,000 in fees. When I did the payback time, it was almost 5.5 years. And so that is not a smart financial decision. I know it looked good and the rate's amazing, but that would not be good, especially with the projection of what's going on. If the rates never came down again and you were there, that's probably a great long-term decision. You're not going to lose by that. But in the short term, based on the projections, you would end up possibly costing yourself tens of thousands of dollars.
Yeah.
So
Yeah,
just remember that.
I think that is a really good point. And what I've seen too is people wait till they're too far into it, and then they're mad that they've got all these fees on here, but they're like, never mind, I'm just going to pay it because I want this to be done. Like, I just want this to be over with. I don't want to do this anymore. This sucks. Like, this is way too stressful. Whatever. Don't give up in those moments, even if you felt.
Oh, I think we lost her. You are frozen right now. I think you're back. You're muted. You're muted.
Is that better? Ooh. Can you hear me?
Can you hear me?
I
Yeah, I
can
can
hear
hear you
you.
now.
Okay, yay!
Perfect.
We're just all muting
We're
each other.
back.
Cool. Anyways, is don't give up, but it goes back to being proactive and knowing what questions to ask, and that's why we're here to help you guys is to go into that situation. I hope that we've earned your trust, that you guys, even if you have a relationship that your mom's cousins, brothers have to use them, let's have a conversation to make sure that you know the appropriate questions to ask so that you're not getting screwed over in the end up front. Because this process is not fun. People ask me and Ben all the time, like, why are you guys in real estate? I do this every 5 to 10 years and I want to shave my head, like you guys do this day in and day out, but we've been there, we know what it looks like. And so we want to be able to help you guys figure that out.
And we'll review. I mean, I know I will. You can call me anytime and send me your current loan estimate or any type of fee sheet. I'll review it and give you a real honest opinion of exactly what it is. And I will not try to be biased. If you have to use this person, I will at least give you the tips on what you should be saying to them so that you can get the best deal, because there are people out there that will hide fees and add extra stuff in there and not communicate what plan they're going with and break it down so that you understand that maybe you're paying points to get that rate that was advertised that you want. Because again, you line up everybody, 100 people in front of us right now, and if someone says, would you rather take a 5% or a 4%, every single one of them is going to say 4%. But if the 4% is $10,000 more, now not everybody wants to take that 4%. They may want to actually investigate what's going on. So just have that hard conversation. Ask those questions. You said it. I love it. You said a lot of even realtors don't want to have hard conversations. It's on the consumer's financial responsibility long term to make sure you have those conversations and inspect that.
Yeah. Well, and like you said, it kind of reminds me of like going and buying a car, right? You're like, I want my payment to be,
Yeah.
$500 a month. Well, that's their goal. They're going to figure out how to get it $500 a month. You may not know the cost that goes into it, the interest rate, the back end fees that you got there, whatever, because you're like, perfect, paying $500 a month. And that's the same thing with rates, is like oh, I wanted 4%. Okay, is that your goal? Yep. They're not asking three deep questions. What does that mean to you? What does that look like?
Yep.
It's just, I want 4%. And at the end of the day, you get all forward in this, and they're like, well, I got you the 4%. That's what you wanted, right?
Correct.
And then they're like, well, yeah, okay, well, but I didn't know this, and this. Well, that you didn't say that. You just said you wanted the 4%, right? And so, like, they bait and switch you into these tactics by then using your own words and goals against you at the end and make you feel like crap. So then you're like, oh, am I the bad guy? Was I the one that did this wrong? And then now you're pissed off, but you don't know that there's any different.
Yep.
So that we see that a lot. One of the other things is there has been an uptick of, buyers filling out mortgage applications, because the general consumers and what everyone's with the general public news and what all the headlines are is that rates are dropping, rates are dropping, rates are dropping. So now all these buyers are coming into the market, which ultimately means we're going to have a supply and demand issue again. And when we have a supply and demand issue again, home prices are going to go up, or you're not going to see buyer concessions. All these other things. You may have to give, the sellers a rent back, put more earnest money down, low appraisal money. If we're not careful and looking at this, we could be in another situation. And so one of the things that I told the team yesterday was to, don't wait to get pre-approved for interest rates to go down. Get pre-approved and wait. Because then you can jump in when you are ready, when you feel like that payment number makes sense, when you see a home that's out there, you are in control and in the driver's seat of that opportunity versus trying to rush and get everything done and not be proactive. And then you're floundering. We're all floundering trying to get it done as quickly as possible. Things happen, mistakes made. You want to be ahead of the game. And you don't want to miss out on that house or that rate. And, Ben said, rates are going up, down, up, down. Like, this morning, I was talking to another lender and she got a lock notice, which means that potentially rates will go up again just yesterday when they were down, So what that means is they got a notice to say, like, lock the rates on your clients so that they don't get stuck in a higher rate later on this afternoon or tomorrow or whatever. And so right now the market is literally a yo-yo roller coaster. They're going to be up, down, up, down, up, down. And so, getting pre-approved doesn't mean you have to buy now, but at least do I need to get my credit ready? Okay, I want to purchase this amount. What does that look like? If rates go down, how much more buying power? If rates go up, how much buying power do I lose? All of that information so that you become a partner in this process versus just a home buyer. I can't hear you. You're muted again. I'm just doing all the talking today.
Can you hear me now?
Yes, I can.
Oh, awesome. Awesome. Somebody was calling in. So the next amazing, and this honestly, I think I love that the rates are coming down and I love this, but this helps the opportunity for those who have been proactive and maybe were turned down, or they didn't understand why they had some credit challenges, or they weren't helped in the facet of creating a roadmap or a plan to be able to buy. You're a renter, you make good money, and maybe you did have some hiccups in life like most of us. And no one's taken your hand and kind of helped you get to that next step of building wealth in real estate. So this is really, really cool. Is the new credit system called Vantage Score 4.0. It's a modernized credit scoring module that analyzes trended data, uses machine learning, basically AI, and incorporates additional information like rent, utility payments, and gives a more accurate credit assessment to expand access to credit.
Ooh.
Basically, what they're saying is that more consumers should qualify because they do a deeper dive into your credit and the assessments that they did. Before, it was very bland and they kind of grouped you together. If you made a late payment and someone else made a late payment, you're in a group together, right? This is going to give basically a better pattern of your financial behavior over time.
Oh.
So if you have 10 years of strong credit and then you make one late payment, but you have someone that's making a late every single month for 10 years, they shouldn't be grouped together. Which in the past, it sounds like when I'm reading some of the stuff they have. Now, it's pretty new, came out in July. Not everybody's using it yet. It's something that's very important. So if you've been turned down and you were proactive, or maybe you didn't qualify for as much as you thought, or your credit wasn't where it needed to be, or you didn't understand what to do to fix your credit or the challenges that you have, reach out to us today, because we can also help not just the current refis and clients. We can help not only that with your credit, but we can help you who is currently renting and currently looking to purchase in the future, or want to create that, or want to be a homeowner. We will help you create a plan.
Yeah.
And that is coming over the next 6 months, I would say, before it's full adoption. It could take longer, obviously, but that's going to be amazing for just consumers in general, that it'll be more info, better info, so that they can actually analyze that behavior of your credit so that you can qualify for more.
I love it. That's really exciting.
I know.
Really, really
Lastly is
exciting.
the to-do, and I know we're bumping into the time frame here, but we didn't do the to-do. So the to-do this week is acquire homeowners insurance as soon as you go under contract.
Mm.
So not only should we, and we've said it on past lives, be inspecting what we expect, and you should be.
You went on mute again. You're on mute. Babe. He just is talking. You're on mute. Nope, you're still on mute. Nope. I'll just finish off what he was saying. So the reason you want to, as soon as you get under contract, be shopping for that homeowner's insurance is because that is part of your payment. You want to make sure that it's still within that qualification, and not all of them are created equal. A lot of homeowners insurance companies are coming in a lot higher these days because during COVID, I think for every dollar spent in insurance, they lost $3. So it is coming. You're still on mute. We want to make sure, so whether you need a couple referrals, typically from your lender, I'm working on building a referral network. So if you're in insurance, hit me up, because I want to make sure that our clients are getting the best opportunities. And so make sure you do that. You're still on mute. A long time ago, I know that a lot of lenders used to call the homeowners insurance companies for them and get that binder. It is on the consumer. Now I'm looking at your wall. Cool. So you're just done for the day. Okay. So if you have any more questions about homeowners insurance or what that looks like, let us know. But I hope you guys have a fantastic day. If you have a personal question or something regarding your own business, reach out, or you want a topic of discussion next time, let us know. We'll see you next Tuesday. Bye.